where you have, let's say, 200 people walking around and they need chairs periodically, and you don't know exactly when anybody's going to choose to sit down. But you have 200 people walking around the chairs, but there's only 150 chairs, right? So as long as everybody doesn't try to sit down at the same time, then the game works, right? It's fine, right? You have 150 chairs, 200 people, it's not a problem. But what if everybody tries to sit down at the same time? So what basically occurred with Bernie Madoff is he was exposed because everybody tried to redeem their money at the same time. So one of the things I would say is with the Bernie Madoff thing, where a lot of people lost their entire life savings and stuff like that, is remember what we've talked about in class for a very long time, which is that diversification is critically important when it comes to your wealth. You do not put all your money in one place. Never put all your money in one place. You do not put all your money in place. Never put all your money in one place. I said that 4 times because I need you to understand that. That means that you don't put all your money with one investment advisor or one brokerage firm. You don't put all your money into one stock that you think is going to be the magical stock that changes your life. You don't put all your money into one asset class because you just really believe real estate is the place to be and you want all your wealth in real estate or in one investment property. I did a consultation with a student one time where he reached out and wanted to do a one-on-one consultation, and those are available on a limited basis, but they're not. It's not cheap, to be honest with you. So it's better to come to class. But if you want that one-on-one, it is available. And Chanel's in the chat; she can connect you to that. Anyway, the student was asking me about a real estate project that he'd invested. He said he somehow saved up $700,000. I guess part of it was from a life insurance policy that was left by one of his parents. The other part was, I guess, savings and investing. He'd done a good job, and he'd accumulated $700,000. So he decided he wanted to use that $700,000 to get into real estate. So his buddy told him about an investment project that they were doing, maybe buying some apartment buildings or something. And he put the entire $700,000 into that one project. And he said, now I can't get my money out. The value of the property is dropped. I'm in deep financial trouble. I don't know what to do. How can I fix this? And I said, well, the first thing I'd have to say is I wish I could give you a time machine so you could go back in time and undo that decision to put all your wealth in one project like that. That is a recipe for disaster. The other piece of that is generally to learn from that experience is, I don't care how good an investment is. You'll never see me dumping all my money into. When I see an investment taking off, I do kind of do the opposite of what everyone else does. And this is part of wealth, honestly, is doing the opposite of what the masses do or doing the opposite of what people think you're supposed to instinctually do. I don't put more money into an investment when it's doing well. I actually tend to put less money in that investment. I tend to say, okay, this is doing well right now. I'm going to make a move while the getting's good. I'm going to convert a piece of that into cash. I'm going to keep some money there, maybe keep some principal there, but I'm going to take some of it, convert it to cash, and move it into another asset class before something goes bad with this one investment. And that's exactly what happened. There was, if you're in the Prime program, which stands for Passive Recurring Income Machine, you guys know we talked extensively about stock options and selling options to generate income weekly, stuff like that. You guys know what happened when we invested in Madrigal Pharmaceuticals. Madrigal Pharmaceuticals, it went from $64 a share. In one weekend, it went from $64 a share to $250 a share. And some of you made a lot of money. One student told me he made $250,000 in one weekend, and I was really happy for him. And he said, well, what do you think I would do? I said, look, I'm not going to give you investing advice. That's not legal. I'm not a licensed investment advisor, right? But I am a guy who invests, and I can tell you what I'm going to do because I made money too. I invest right along with you. And so I was pretty happy. First thing I did was I moved my money away. I took money off. I said, I'm going to go ahead and sell a big chunk of this. I'm going to leave a little bit there. Maybe there's more upside to it. Maybe there's more of the ride to be had. But I took that money and put it into other places. So ultimately, if you want to protect your wealth, that's how you do it. And so that's my 2 cents. And by the way, one thing I want to mention to you guys is that if you log in at the blackstockmarketprogram.com, I do have, if you look under what Dr. Boyce is buying, I'm going to put a list of stocks in there for this week that I like for this week. Also, if you go to drboyceprime.com, if you're in the Prime program, then there is a list of what I call Dr. Boyce Moneymakers. I'm going to fill that list up today as well. So feel free to log in and take a look at that. If you have a question, by the way, you can put your question in the Q&A section, and that way I'll see your question. Let's see here. Dennis says, can I get the real world Dr. Boyce definition of historical volatility? Historical volatility is easy. It's kind of pretty much measured typically by something they call standard deviation, which is where you just look at past data and you look at how much the stock does this, right? So a non-volatile stock is pretty flat or pretty smooth, whereas a volatile stock is, like an EKG, kind of up and down, up and down, up and down. And so historical volatility, it does tell you something about the nature of the beast. It doesn't tell you about the future of that stock per se, but it does give you some indication of the level of risk that you might be looking at. So for example, something like crypto, it has pretty high historical volatility because it is a relatively unregulated brand new asset class. So it's almost like going out into the wild, wild west. Before the West was settled, if you went out west, there was no structure, there was no police. So there was no, there wasn't a McDonald's on the corner that you could go to eat. There wasn't a police, there wasn't a place you could go to go get a job. So there was a lot of chaos out there. You can go out there and get killed, and these saloon towns, people would shoot each other up. Nobody would do anything. And so the situations like that provide a lot of risk, but they also provide a lot of opportunity, right? So if you are a cowboy who knows how to handle a gun and knows how to go find resources, like how to dig for gold, and you hear there's gold out there in them near hills, but there's no law around to really regulate or whatever, but you're not worried about that because you know how to take care of yourself, then maybe you would rather be there than to be in a place that where there's police on every corner and all the good opportunities are taken and everything else, right? So as an investor, I kind of like that aspect of crypto, that it is kind of a primitive market and kind of messy and very hard to kind of sort of know exactly what's going on, because I can see what's going on. I understand. I know how to handle myself. I'm a finance professor, so I kind of know what to watch out for. But if you're a new investor and you are not really super well trained in it, you got to be really careful because in that town, people get shot every day. Crypto is a really crazy place to invest, but there are some safe spots. I think Bitcoin is amazing right now. If you look, if you're following Bitcoin, you probably made a ton of money this month. If you've been buying consistently, Bitcoin, as quiet as it's kept, has been really on the rise. And I think it's going to continue. I think that once the economy gets better, Bitcoin's going to do amazing things. So I have a lot of money in Bitcoin and in Ethereum mostly, and I'm just waiting for it to go up. If you want to see some of the cryptos that I bought, this list is a little old. It's about maybe 2 years old, but I tend to buy and hold. You go to drboycecrypto.com. Let me see if that URL still works. I got to double check, make sure. Let me see, drboycecrypto.com. There we go. Yeah, if you go to drboycecrypto.com, there's something there where you can take a look at what cryptos that I'm buying. So feel free to go to drboycecrypto.com. All right. And so by the way, so that's some of the stuff that we give away for free. Now, you guys know, in the Black Business School, we can't do everything for free because we are an educational institution, and the best we can do is whatever you were paying to go to college, we're going to charge you probably less than like 5% of that. But we have to charge for some things because that's how you pay bills. That's how you operate independently. Freedom isn't free. So we're not run by government money. We're not supported by corporate money, because we have to be able to pull together the right experts that are going to ask the right questions to solve the Black wealth problem. And we know that in order to do this independently, we've got to pay those bills. So that's the difference. If you want to know between, we give you a lot of value for free. And I hope you agree with that. There's a ton of stuff. There's so many of you who've said you learn more from us for free than you learned by paying $100,000 to go to college. And that's what I expect, right? We want to give you tremendous value for nothing. But then some things do have a fee attached, and we like to work with you. So we have a support team, support@theblackbusinessschool.com. All right. So if you ever have something that you really want to do and your budget isn't quite right, email support@theblackbusinessschool.com, or if you're in class, just hit Chanel up in there in the chat, and they'll work with you. They'll help you figure out a plan where we can help your family, and so that's kind of how we operate. If you want to know, we're very transparent about that. All right, so let's see here. Marie says, what hotel would A, B, and C be using this year? We don't have that hotel yet. I'm waiting for the event planner to solidify the venue. That should be very, very soon. I know a lot of you, just so you know, we're almost sold out of the A, B, and C. So if you go to allblacknationalconvention.com, you can go ahead and get your tickets. Now, if you trust us, we're going to be in Atlanta. That much we know. But the specific venue, we kind of take our time to decide because we want to make sure that every year we switch locations. We don't go to the same city every year. So we're still kind of working on that. We're actually going to have a meeting about that today. So just go to allblacknationalconvention.com and you can go ahead and line up your passes if you'd like. It's going to be at the end of October, Anita. The specific date, again, that's another thing that's a little bit variable. We try to leave it flexible because since we're an independently operated organization, we can't spend $1 million on a convention, right? We keep our budget tight to avoid the problems that you're seeing in crypto right now. Like right now, crypto has major problems because they over leveraged. They borrowed too much to run their businesses. We didn't go deep in debt. We have a little bit of debt, but not a ton. And again, this is where my PhD in finance helps me a lot because I see the dark side and the bright side of everything, right? You can't show me something that looks 100% good or 100% bad. If it's good, I'm going to ask, well, how can it go bad? If it's bad, I'm going to say, well, how could this be good? And so that sort of financial sight was really been extremely critical in building the Black Business School. How do you build an educational institution that impacts more people than most HBCUs, but you're running on a tiny fraction of the budget? Well, that came from, really utilizing technology, really understanding how the internet works, really understanding the necessary expenses versus the optional expenses. We didn't go out and hire 10 million people. We have a small team of very dedicated people who are 100% B1, like Chanel's in the chat. Chanel's been with us for many years, and most of our team members have been here for many years, and we pick them very carefully. And you have to, when you're scaling a business, when you're scaling a Black business, you have to scale carefully. You can't do what white people do. You're not white. I'm not saying that the white people are terrible or anything like that. I don't hate white people. I never have. I don't hate anybody. Hate is too much. It's a bad energy. I don't want to carry around hate. It's more so like, I think that one of the reasons a lot of Black businesses fail is because we're trying to copy a model that really doesn't work that well for us. You go to college and they tell you, oh, well, most entrepreneurs take 3 to 5 years to become profitable in their business. Who's got 3 years to lose money? Who can lose money? How many of y'all can lose $100,000 a year for 3 straight years and not be homeless? That's hard to do. So most Black businesses have to find a way to be profitable in 3 to 6 months. And that requires a lot of pre-planning. It requires you to not get greedy. It requires you to not scale too fast. It requires you to focus on getting profitable as quickly as possible and then grow within the bounds of profitability, not try to just overdo it. A lot of the businesses that you're seeing on the stock market that are getting pummeled, where their stocks went down 90%, a lot of that decline was due to the fact that they over leveraged. What they do is they kind of treat their businesses like a slingshot or a boomerang, right? A slingshot is somewhere you pull way back and then you let it go and then it goes out a far distance, right? And the further you pull back on the pulley, the further it will go. So some of them create their businesses where they're just these massive slingshots where they go way, 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 way back. We're gonna go deep into debt. Debt. Then boom, we're gonna go out and make $10 billion, right? Because once we become profitable, we're gonna kill it. We're gonna do what Amazon did. Amazon did that. They went deep in debt, and then boom, when they let go of the slingshot, Jeff Bezos becomes the world's richest man. That model works in a good economy. That model does not work in a bad economy. In a bad economy, you pretty much get judged by where you are. So if you're going deep in debt, and then the economy goes bad, well, then your company looks like a turd. It looks terrible. And the banks say, oh, we're not going to fund that. We're taking your financing away. Next thing you know, you don't even get a chance to let the slingshot go. They take your slingshot away. Your business dies. The creditors call their money. And Elon Musk is having that problem right now. Elon Musk went from the richest man on earth to, I think there was maybe, I want to say maybe a 70% decline in his net worth in the last year. Tesla stock has been plummeting. Twitter is private, but it's kind of a struggle. And a lot of Elon's problem is he has a lot of debt out there to finance these massive ventures that he's doing, and that could cause him significant financial problems. So this gets me an opportunity to express to you that I am not a capitalist. A lot of people think that because I'm a finance guy that I'm a capitalist. No, I don't believe in capitalism. At its core, at its root, I think capitalism at its root is not healthy. I think capitalism, in its most extreme cases, is built on greed. It's built on feeling like you have to be number one. You have to keep growing. You got to be the biggest out there. That's just not good because you're taking too many risks in order to do that. If you got a healthy company that's making a ton of money, why not go ahead and try to become profitable so you can at least be safe in case there's a downturn? Like a lot of the streaming services out here are getting killed because they borrowed Netflix. Think about this. Netflix was making about $2 billion a month on their subscription service. And then I remember reading in 2020 where they went out and borrowed another $12 billion to make more expensive content. And I was like, if you're making $2 billion a month in revenue, why do you have to go another $12 billion in debt? $2 billion a month isn't enough to finance your operations. You still got to keep going deeper in debt. And if I show you all, let's do a quick little digital field trip here. Let me show you Netflix stock. I mean, it's been getting killed. Netflix is, now the economy has been kind of getting killed. And I think Netflix stock is going to recover in certain areas. It'll never get back to where it was. But let me see. I'm gonna look at the 1 year. The 1 year layout of Netflix stock. Okay, so here, let me show you guys on the screen so you can see it here. So here is Netflix stock. You see here, if you go back a year, Netflix stock was trading at 510. Now it's down to 324. It's gone down 36%. But if you look at its peak, it was at 690, almost $700 a share. Now it's trading at 324. And a lot of this decline, in my view, now it's doing okay this year. This year has been, just so you know, this has been a good year so far. I mean, first 17 days of 2023 have been awesome for you as investors. If you've been consistently investing, like if you were looking at the list of stocks that I give you guys every week, if you log in at the blackstockmarketprogram.com, that list is always there every week. If you've been consistently investing in those stocks like I have, you're making money right now. Your money's going up right now. I hope, give me a yes if your portfolios are a little greener. This is a good time to invest. Now, today it was a little bit tough. I think the market went down about 300 points. But, even Netflix, I do own shares in Netflix. I bought when the price was much lower. I didn't buy when it was super high. And my Netflix stock is doing really well. But then again, all my stocks have been doing really well. So this is good. This is probably the precursor to something even better as time goes on. This is the time to buy. And I keep saying this repeatedly. I've said it 10 million times, but a lot of people just don't listen. They just don't listen. And then, when you're making money and your friends are not, or they're only getting money from their job, they get a little bit jealous of you, but it's not as if they don't have the opportunity, right? And it's a complete myth to believe that people stay broke because they don't have opportunity. No, you stay broke because you choose not to pursue opportunities that are presented to you. You stay broke because your mindset has you trapped in a prison that keeps you thinking the same way, doing the same thing that you've been doing before. And that's one of the reasons why on Sundays, you guys know my wife is a therapist, and we created the Black Financial Therapy Department in the Black Business School, first ever Black Financial Therapy Department ever, because I realized, I said, okay, a lot of our people just need therapy. We need therapy to deal with the anxiety that comes with our concerns and worries about money. You can open up the newspaper any day and hear about a one Black person killing another Black person over money, divorces over money, lots of problems and conflict over money, stress over money, fear and intimidation over money. A lot of you are intimidated by this. You say, oh, investing is for smart people and whatever, because you see these white people on TV wearing fancy, the $3,000 shoes or whatever in fancy suits. And they're these sophisticated bankers talking about, safe notes and debenture bonds and convertible securities. And you get scared. I get it. I understand. So the therapy is there because I need to help you understand that this ain't that hard. This is not that scary. There are, believe it or not, it's crazy. When I went through the most complex theories in all of finance, and I had to do all the math related to them, and believe me, it is brutal, absolutely brutal. And my PhD is real. You can go look it up online if you want to read what I wrote about in my dissertation. And the thing is that when you go through all these theories and you look at all the variables and all the different perspectives and angles and all the mathematics behind it, it's fascinatingly, elegantly beautiful that how it all comes down to like a few simple things that you have to do to make money. This is why Burton Malkiel got I think he got the Nobel Prize. I got to double check that. But when he wrote A Random Walk Down Wall Street, he was able to invest with monkeys. He was able to show how monkeys can make money, more money, that a monkey will make more money than you if you work a job and never invest. A monkey that literally throws darts at a wall will make more money than you do if you don't invest in the stock market. So the biggest mistake you can make in investing is to not participate. If you don't participate and your money isn't going where you want it to go, don't be surprised because you're not participating in the economic engine. So, a lot of people say, well, if you don't vote, you don't count, or if you don't vote, don't complain about your politicians. Well, I'd say that this is a financial equivalent to that, to say, if you're not in the game, then how are you going to win? How can you win a game that you're not playing? How can you win a game where you're scared to even get in the game? You can't win a Super Bowl if you never put on your pads, never learn how to throw a football. Okay, so that's my 2 cents. All right, so let's see here. Okay, K Hitch says, should we take money out of banks because the government's trillions of dollars in debt? That's a good question about banks and debt and everything else. I've shown you guys the debt clock. What I'm actually going to do